So unless you've been hiding underneath a rock this year, you will know that the stock market has taken a dramatic tumble. Stocks officially entered the market crash zone in just a couple of weeks. Now, this can mean only one thing, that we should all panic and sell out of all of our stocks. Just kidding. It's sad to think that a lot of people are actually doing this. What we really should be doing is buying more stocks as they get cheaper. As Warren Buffett says, whether we are talking about socks or stocks, I like buying quality merchandise when it is marked down. And no better time as stocks being marked down than the year of 2020, where the prices have been absolutely crashed. So what I'm going to do in this video is go over the 5 stocks that offer great opportunities to buy during this market crash. Let's get straight into it. Now, the first stock that we need to get into is Warren Buffett's largest investment in his overall portfolio. The company is called Apple, and it's been hit really big in the market crash. As you can see, it's down over 30%. Apple, they had an all-time high of around $327, and now it's down well below that. It probably will keep going down, at least in the short term. But this offers great opportunity. It's brought the PE ratio down to a nice amount at 18.2. Now that the price has gotten lower, the dividend yield has also gotten higher. It's now 1.26%. Now, these numbers, as the price keeps going down, will just keep getting better, and we can average down our position. Now, we got to realize that Apple, as a business model, they're going to be fine in the next couple of years. It does not matter what will happen. People are still going to be using their phones. The phone is like the biggest thing in people's lives these days, let's be honest. So that's Apple's main source of revenue. It will be fine as a long-term business model. Same with the iPad, same with the MacBook. People will still use those. And the services, that will be fine as well. People will still use iTunes and the rest of them. I'm not sure about Apple TV. That still remains to be seen. Anyway, let's move on to the next recession stock, which is an interesting call. So this stock I'm going to talk about is extremely controversial, and I'm sure a couple of people are going to go back and forward with me on this stock, and that's because it's an airline stock, and airline companies are basically facing the brunt of the 2020 stock market crash because no one wants to travel anywhere. In fact, we're not even allowed to travel anywhere, and this has halted travel companies in their tracks, and the stocks of these companies have been hit even worse. I mean, if you look at this graph, it looks like the line has fell off a cliff. It's down 65% from its all-time highs. And we've just heard the news that Delta have suspended buybacks and dividends. So this is a stock that you might want to just wait a little bit before you buy in. I think their price will get even lower within the next couple of weeks. So the question becomes, why do I like the stock after its crash? First, let's think through long term. 3 to 5 years from now, people are still going to go back to flying and traveling. The business model, it's a fine business model. It's just not fine when you basically have a global shutdown. Secondly, I think even if things do get really bad, the government's going to step in. Even now, they're talking about a potential bailout of airline companies of $50 billion. And the president, Donald Trump, has come out and he said he's backing them. He remarked, "We're going to back the airlines 100%. We have to back the airlines. It's not their fault." Don't get me wrong, it's the most risky stock on my list, but certainly an opportunity. I do think that the market crash is a great time to be thinking about getting our hands on good quality businesses, good quality stocks for the long term. One of those that we can talk about that I like is a stock called PepsiCo, ticker symbol PEP. There are 3 reasons why I like this stock. As I'm sure a lot of you are aware, PepsiCo are a food and beverage company. They don't just own the brand Pepsi. They own a multitude of billion-dollar companies. I'm talking the likes of Gatorade, Lay's, Mountain Dew, Doritos, 7-Up, Cheetos, Lipton, big names in here. And because they're food and beverage, it doesn't matter if the market is crashing. People are still going to need to eat. I'll tell you that. Secondly, their dividend. PepsiCo has increased their dividend payout for 48 consecutive years in a row. That means they almost come under the definition of being a dividend king, one of the safest dividend stocks to rely on. Even in recessions and market crashes, Pepsi have still increased their dividend to their shareholders. And right now, their dividend yield is not bad for something trustworthy. It's sitting at $3.82, giving it a dividend yield of 3.26%. But this brings me on to the third reason why I like PepsiCo, and that is because of the recent price sale. Yes, I said price sale, not crash. That's how we should view stocks going down. Right now, they're down about 30% from what they were around the start of the year. Not the worst time to get your hands on this safe dividend stock. Now let's continue with this theme of trying to get our hands on quality companies for the long term when they're cheap. One such company that is very hard to beat when we're talking about quality is Amazon. Amazon is a company with an amazing business model. Obviously, they're getting nice amounts of money from Amazon Prime, the subscription service for streaming music and video. They have AWS, the leading cloud service provider, beating the likes of Microsoft, Google, and all the others. And of course, their most important is their e-commerce section, which is pretty much taking over the way we do commerce these days. Everything is done online because it's just so much easier. And this is why Amazon's revenue is just growing at a compound rate of return, because e-commerce is taking over and Amazon is the king of e-commerce. In 2019, they delivered $280.5 billion in revenue. This will only get bigger. When we look at the price of Amazon, it actually hasn't crashed by as much as most stocks. I mean, don't get me wrong, it's still gone down, but just not to the same degree as others. So for the stock, we might want to wait a little bit until the numbers get a little better. We can wait as the price starts to get cheaper, as the 2020 crash deepens, and then get our hands on this company for the long term. The last stock that managed to make this list is one of the greatest companies of all time. It's Warren Buffett's investing firm called Berkshire Hathaway. Berkshire Hathaway is a company that owns an array of high-quality stocks and businesses, chosen by arguably the best investor of all time, Warren Buffett. The likes of Coca-Cola, Apple, Geico, Duracell, amazing businesses in this list. And Warren Buffett, he's no dummy when it comes to the way he invests. He, for years and years now, he's been building up a massive cash position. Everyone thought he was crazy for doing this. They thought he lost his touch. But he was waiting for an opportunity in the stock market. He was waiting for sales, playing the game prudently. And obviously, in order to buy those sales, you need something called cash, which Buffett has stockpiled over $100 billion worth. This will be one of the big companies that profits the most long-term from the stock market crash because of Buffett's prudence. And if we look at the price, Berkshire Hathaway is down very big at the time of making this video, around that 25% mark, and likely going to get cheaper. Now, guys, I just want to make this clear. I'm not saying go in all guns blazing and take massive positions in each of these stocks. Remember, we're only just seeing the start of this market crash. It's been less than a month. If you look through history, the last 11 crashes, the shortest one has been 3 months. So, what I'm doing is just playing it safe for now. I still see things getting worse, so I'm not going to be buying in just yet. I want to see a little bit of light at the end of the tunnel before I start dollar cost averaging my positions. But you can bet your bottom dollar that America and American stocks over the long term will be fine. As Warren Buffett says, over the long term, the stock market news will be good. In the 20th century, the United States endured 2 world wars and other dramatic and expensive military conflicts, the Depression, a dozen or so recessions and financial panics, oil shocks, a flu epidemic, and the resignation of a disgraced president. Yet the Dow rose from 66 to 11,497. That's why it's so key to be a long-term investor and to invest looking at the facts and not with your emotions during this market crash. You know, I've personally studied Buffett and the way he invests for about 6 years now. And there's arguably 2 key tenets that I've noted in how he chooses stocks. And that are these. One is he looks at buying quality companies, wonderful businesses, the ones at the top of their game. He doesn't just put his cash into any old business, okay? The second thing is he likes to buy these businesses when they're on sale, selling at a discount. And this is why the 2020 stock market crash is such a great thing for us investors, because we can get our hands on good quality stocks for cheap prices.